Good day, you're watching Businessworld Live. I'm Jesse Delos Santos together with Danie, Laurel. Here are today's top stories. The Philippines, together with Thailand, logged the biggest increase in debt-to-GDP ratio in a span of 2 years.
Now, as Congress formally opens, let me check this. As Congress formally opens session on Monday, the business community pushes for the passage of 24 measures, including the easing of foreign ownership restrictions.
The European Central Bank hikes interest rates for the first time in more than a decade in a bid to arrest soaring inflation in the Eurozone.
And passenger traffic at NAIA rises sharply. That's following the easing of requirements for travelers.
Now we begin our broadcast with the Philippines recording the biggest rise in debt-to-GDP ratio in the world from 2019 to 2021. This is according to Moody's Analytics, which notes that Thailand joins the Philippines in this record. The research firm says both countries were the slowest growing economies in the region last year and required substantial expansionary fiscal policy to support recovery. Moody's Analytics also said that the Philippines, Thailand, and Vietnam had trouble containing total debt last year due to tightened COVID-19 restrictions. Recall that the country's debt-to-GDP ratio stood at 60.5% at the end of 2021. This is beyond the 60% threshold for developing economies. It was also much higher than the 39.6% logged at the end of 2019. As of the first quarter of 2022, the country's debt-to-GDP ratio jumped further to 63.5%.
Now, local business groups and foreign chambers have released a list of 24 measures that they want the 19th Congress to prioritize. This group includes the American and European Chambers of Commerce, the Management Association of the Philippines, and the Makati Business Club. They sent their wish list to President Marcos Jr., as well as the incoming House Speaker, Senate President, and the key cabinet officials. The list includes 7 bills that reached advanced stages of approval in the last Congress. These are the liberalization of foreign equity restrictions in the 1987 Constitution, open access in data transmission, and ease of paying taxes. Now, also included are the promotion of digital payments, the creation of the Department of Resilience, and the last 2 tax reform packages of the Duterte administration.
Now, Batasang Pambansa is now under lockdown in preparation for the first State of the Nation address of President Ferdinand Marcos Jr. But even before the lockdown, only essential workers were allowed to enter the Batasan complex. K-9 units have also been deployed to regularly secure the perimeter. Authorities remind the public that on the day of the SONA, protesters will be prohibited from going near Batasan. Instead, protesters will only be allowed in freedom parks like the Quezon Memorial Circle in front of the Commission on Human Rights and in the UP Diliman campus.
Sabi nga ng pulis, magkakaroon tayo ng issues sa traffic, especially Commonwealth at IBP Road. Traditionally, hindi naman talaga binibigay yan. Tapos, nung pag pinayagan sila like ever Gotesco, talagang traffic, maghapon na traffic yan. This time, parang assessment nila, masyado namang abala sa mga hindi magpa-participate doon sa rally.
Now, in the midst of a challenging economic environment, how are retailers holding up and what assurances are they seeking from the President in his first State of the Nation address? Let's get insights from industry leader Rosemarie, President of the Philippine Retailers Association and Senior Executive Vice President and COO of Wilcon Depot. Ma'am Rosemarie, good morning. Thank you for joining us.
Yes, good morning.
All right. First, again, like what we were talking about earlier or reporting, what are you hoping to hear from the President in his first SONA? Any wish list here from the retail space first, especially on the backdrop of high inflation and logistical and supply issues as well?
Yes, of course, we want to hear the economic plans of the President. And of course, what are the exit plans, no? Related to the economic plans also, we want to hear from the President that, about the taxation bill on e-commerce, no? Because we've been advocating for that because we want to give priority for this taxation bill due to the substantial loss of revenue for the government. No, we know that the e-commerce platform really has been very, very strong. Although brick and mortar is recovering, slowly recovering now, no. So we want to create an equal level playing field for for the retailers, no. Especially the brick and mortar, they're paying taxes, they're complying with whatever government regulations. And here we see a lot of online, players, especially those cross-border, wherein they don't pay substantial taxes and they don't comply with whatever regulatory requirements.
Okay, very interesting there, ma'am.
Yeah.
Go ahead. Now, just to take a step back, no, of course, inflation has hit us in our daily lives. But what about the retail sector? Is this across the board? There has been pain, and have you already done certain measures to protect the retailers, for instance, by maybe pushing prices up? And to what extent are you trying to maintain the prices as they are without hurting the consumers?
Well, many retailers has been, exercising a balancing act, no? Because we cannot be off the market just because prices of, let's say, commodities and then, of course, logistics costs has increased. I'm sure you've heard about container shortages and the rising prices of oil that has been affecting the supply chain, no? But we're doing a balancing act. We're doing it by tranches, no? And it really depends on the sector. I'm sure most of those that affected are the basic commodities, which are food, But by and large, retailers are really observing the market. As I've said, they're doing a balancing act. We don't do it across the board, We only probably raise price when it's really affected. I mean, those goods that are coming in that were hardly affected by the rising prices of oil, of oil. No, for the past months, no, we've seen a strong recovery for retail, and I'm sure many of the retailers, have made some sacrifices also, no, if they can absorb, because this is the only time really that we're bouncing back, no, coming from a 2 month, coming from a 2 years, lockdown and slow sales, no, but now we're slowly recovering, and we see a strong recovery, coming from the first quarter, and it even continued in the second quarter, given that we came from the election, right?
Has consumer behavior changed dramatically, directly in terms of them buying retail, or is revenge spending still there? Some have said, there's a lot of savings that people actually had during the pandemic, and now they're going to places like Wilcon. They're starting to refurbish their houses. They're finally able to afford certain things. So what's the real story here? Are they tightening their belts, or is there still consumption driving this?
Well, coming from the lessons of the pandemic, no, I've seen that many of the consumers now, they're more practical in their spending, no, given that many of the prices have increased, no. Some really trade down, no, and some still stick to their, of course, depending on your on the economic segment, no. But by and large, what we've experienced is that at the start of the opening, no, there's really a pent-up demand, and even during that time that we were still challenged with all the restrictions, no, there was a pent-up demand for some soft categories specific to home improvement, no. But when things started to open up, construction has been very active already. We've seen a lot of because many of the projects have slowed down, or either they stopped, no, because of the restrictions during the past 2 years, no. But now that they're slowly going back already, no, we've seen an increase in demand for the hard lines, no. So meaning that those construction projects that were halted, they're now continuing, no. So we just wish that by after you finish, because in construction it doesn't just take just 1 or several months, no. It takes a process, no, probably 6 months, no. We hope that those that are being planned to start, no, they will start with it despite all the challenges that we're facing now.
Now, ma'am, I want to pick up on one point that you raised earlier, how the shipping environment is very challenging at the moment, especially with more economies reopening. How long do you see that extending, and how is the sector working around the holdups in logistics, such as shortages in containers?
Well, at the start, there was really an increase in demand. Everybody ramped up, no? The big economies ramped up, no? So there was really a shortage in containers, no? Because it was abnormal. But now we're experiencing a slowdown. I mean, in terms of the challenges, no? So slowly, even the prices of the container now has gone down also. We've experienced a very high, price for containers, especially those coming in from China because of the lockdown, but now slowly China is normalizing also, although we still face some challenges, no? I think most of the retailers, what they do is that they're very creative. If one port is locked down or another port is locked down, they try to find a way, no? Because, it's really how you innovate and how you be creative, no? Just to be able to thrive and survive in these very challenging times.
Okay, more on the domestic business environment as well. You now have some corners of the private sector proposing to recalibrate the current alert level system that we have. They want to put in place a stoplight system with the hope that majority of the country would at least be green and go in the near term. Your thoughts on tweaking the current alert level system?
Well, I guess many of us have learned already what happened in the past 2 years, and we're all prepared already. That's why I've mentioned earlier, I want to hear from the president what is his exit plan for this pandemic. No? We just have to realize that, the COVID is really part of our lives already. I mean, we cannot discount that it has really impacted all of us. No? So we've learned from the lessons. We know, I mean, most of the stores now, especially the retail stores, they've been focusing on reconfiguring their spaces. They've been focusing also on, improving the ventilation. And also they've been focusing on how to promote health and safety in the workplace. No? So with that said, I hope that, the government would, recognize that we all learn from this, no? So we know how to address all of this, no? So it's like having this alert level. Parang if there's typhoon, of course you have signals, right? But if there's no typhoon, you don't say there's signal number one, no? So we should not remain at that, no? So I hope that the government would consider, easing up the restrictions and also on this alert level system.
Ma'am, you are currently in your 78th store, which is opening right now in Ilocos Sur. So congratulations on that. But tell us, why you're sticking to this strategy of, you mentioned offline po, 100 stores by 2025, which has always been your model, brick and mortar. But at the same time, you've been pushed by the pandemic to change, to digitalize, to go in the realm of e-commerce. What is your strategy here, and what are retailers doing in general? Are you going to be putting more of your sales, a percentage of your sales in e-commerce? Are you investing in that, or are you continuing on this path and believing that foot traffic and the traditional ways of shopping are still going to be here?
Well, of course, first and foremost, our objective really is to serve the Filipino people conveniently and more efficiently, no? So the mindset is that we should stop treating brick and mortar as a standalone environment, no? So what we're doing now is the lessons we've learned of the pandemic, no? We need to digitize, not just because we wanted to change brick and mortar into a digitized platform, but basically we want to serve the customer, give them an option. If there's restriction, there's this other option. So what we're doing is we're marrying offline and online so that we can conveniently and efficiently, serve our customers with seamless approach. No, it's really giving them that option, that the same journey as what they experience in offline, no? And we all know that with brick and mortar space, no, it gives you the comfort of seeing the product in realistic figure, no? Especially for home improvement, no? People really want to have the sense of touch and feel, because you're going to install a product that that you will use for quite some time, and you even pass it on to the next of kin, right? Especially when you talk about home building, no? But of course, the option for the customer is that they will have all the information in the digital space, in the digital platform, because what we've experienced now with the customers, that they don't stay long in the store. When they go to the store, they already have a list of what they want to buy, because prior to that, all the information that they need, it's all found in the in the digital platform, in the website, or in the e-commerce platform that we have, no? So it's really giving them that journey wherein all the information they need, they can get it digitally. And then if they want to have the touch and feel of the product and to know more about the product offhand, no, we have that option for them.
All right, so it's complementary rather than a total shift. I don't know about you, Jess, but I still prefer seeing the furniture in
Especially,
real life.
especially so for home improvement. Oh.
Sa website, diba? All right, thank you so much. That was, of course, Rosemarie Ong on behalf of the Philippine Retailers Association, also SVP and COO of Philippine Depot. Thank you, ma'am.
Thank you.
Now let's pause for a quick break, but coming right up after that. Philippine banks are expected to sustain their profits as the economy continues to recover from the pandemic. More of that and other stories when Businessworld Live returns. Stay with us. And you're still watching Business World Live here on One News. I'm Jess de los Santos.
And I'm Danie, Laurel.
The European Central Bank has raised its key interest rate by 50 basis points. This is the first rate increase in 11 years and the biggest since 2000 in the Eurozone as the region confronts surging inflation and recession risks. The rate move aligns the ECB with a global push to tighten and ends an 8-year experiment with sub-zero borrowing costs. The ECB said that further normalization of interest rates will be appropriated at upcoming meetings.
We expect inflation to remain undesirably high for some time, owing to continued pressure from energy and food prices and pipeline pressures in the pricing chain. Higher inflation pressures are also stemming from the depreciation of the euro exchange rate.
With Italy enduring a fresh bout of political turmoil, ECB President Christine Lagarde and her colleagues also unveiled a tool called the Transmission Protection Instrument. The ECB hopes that this tool will ensure markets don't push up borrowing costs too aggressively in vulnerable economies as what happened in 2012 when the euro's existence was questioned.
But looking further ahead, in the absence of new disruptions, energy costs should stabilize and supply bottlenecks should ease, which together with the ongoing policy normalization should support the return of inflation to our target.
Transport groups are urging the LTFRB to reinstate routes that were suspended at the onset of the COVID-19 pandemic. The groups say it's important to reopen these routes as face-to-face classes are set to resume in the upcoming school year. The LTFRB assured transport groups that they are now preparing to restore some routes that were closed due to previous lockdowns.
So ang una po naming nirekomenda sa kanya ay ang pagbubukas ng mga at least 30% ng mga naputol na linya dyan sa North Metro Manila, sa bandang Commonwealth, sa Bulacan, pati na rin po sa South Metro Manila. In a few weeks, mailalahad na ho namin yung mga mabubuksan natin na ruta para sa ating mga estudyante.
However, LTFRB Chairperson Sheloy Garafil clarified that not all bus routes along EDSA will be restored.
We cannot commit that because we have the EDSA busway. Madami po, majority po ng routes natin, especially dito sa NCR, bumabagtas po sa EDSA. So talagang hindi po natin mababalik yung EDSA route.
Now, passenger volume at NAIA rose sharply in the second quarter. The Manila International Airport Authority said the NAIA logged nearly 8.3 million passenger traffic in the 3 months to June. International passenger volume was up 129% from the previous quarter, while domestic traffic rose 87%. The MIAA attributes this sharp increase to the easing of safety requirements for travelers, including quarantines and test results.
S&P Global is expecting further growth of Philippine banks' profits and loans as the economy recovers from the pandemic. S&P forecasts a credit growth of 5 to 7% this year. They say that any reduction to banks' reserve requirement ratio could push credit growth toward the higher end of the forecast. The credit rating firm also expects sector-wide profits to return to pre-pandemic level this year. S&P expects the economy to grow by 6.5% this year. All right, lots of growth stories to end that stack of headlines there, Dan. And those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos.
And I'm Danie, Laurel. We are One News, all sides, all the time. But don't go away. We'll give you the latest on the local course when Businessworld Live returns. Stay with us.
All right, Dan, surprise rate hikes abound. Which direction is this bringing our equities?
Okay, equities seem quite confused, Jess. You can see that on my terminal here. In the US, of course, it was before this hike in the ECB in the green here. But if you take a look at Europe, it's quite mixed. In Germany, in Spain, and the FTSE MIB, it's in the red. But the rest, in terms of Euro stocks and FTSE, are in the DAX is in the red, but the FTSE is in the green. So we don't really know how they are responding, which direction. And if you take a look at Asia, it's quite the same thing. It was quite modest in terms of opening, but right now seems to be tilting towards the upside. Now, if you take a look at how we are opening, we're going against the tide of Asia and following more in the direction of Wall Street. We're back down to 6,200 levels. We are down by 0.2 or 0.3%. Now, a lot of eyes are going to be on currencies because this surprise 75 bips rate hike in the ECB was predicted by only 4 out of 53 surveyed by Bloomberg, Jess. In fact, ECB Chair Christine Lagarde was signaling 25 bips for weeks already. But this, of course, comes on the back of Euro CPI rising 8%. That's above 4 times above the 2% target. And you can see the euro strengthening here versus the dollar. It had already reached 1:1 parity. So in that sense, that strengthened the euro. But if you take a look at the currencies here, especially the peso, we are still down, by 9.4% year to date. So even more pain here, as of course we looked at, we feel the pain of all the developed countries raising rates. And finally, just a quick peek at our movers here before we end the broadcast. Mixed picture. It's not all in the red, but you can see our biggest losers here continue to be, some mixed names. You've got Ayala Land, you've got Jollibee down by 1.7%. But on the upside, you've got URC, SM Prime, and Ayala Corp. So it's really anyone's guess. It seems that markets are quite shaky as we end the trading week. Next week, Jess, will be a lot of eyes on earnings, not just in the US, but as well as here domestically. So stay tuned for that.
It seems as though things are not going to end well for the week. Let's see how things hold up for the rest of the day. And that's it for today, July 22, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com.ph and stream One News Live anytime, anywhere. I'm Jess Delos Santos.
And I'm Danie, Laurel. Mask on, wash hands, stay safe, Philippines. We are One News, all sides, all the time.